especially given what we heard last week with a slew of central bankers really being very much focused on inflation, right? So where do you invest in this environment?
Well, short answer is high quality bonds. But let me explain why. Because the equity market, I would say we have some differences here. And so you have some markets, especially EMs, where you could say, they're not priced for heroic growth in the first place. So here you can probably place a bet within equity markets. But of course, we all know that in terms of weight, the US market really dominates it. And the US market is really hard to reconcile. Right? The US market is so expensive, it either tells us growth is going to be great or we're going to have massive rate cuts or possibly both. And that is unlikely. So still a bit difficult, still a bit early, especially for the US market at this stage. Whereas in terms of high grade and high quality bonds, this is the time to be. I mean, we're talking potentially over 12 months or so, even double-digit return potential. So we haven't seen these kind of potentials for a while. And it would come along with, especially in the US, that still has a reasonably resilient economy. But next year, things are going to look different. Things are going to look a lot slower. And that's where the upside for bonds comes.
How does a recent rebound in energy prices play into your calculations?
Yeah, it also dampens, right? It acts a bit like a tax, so it sort of also does its share to dampen the economy. So also being cognizant, of course, that it's not really a part of the core inflation picture, but nonetheless, right? If anything, on the margin, also speaks in favor of a softening economy, also in the U.S. So the outcome remains the same. By the way, we probably. A couple of months ago, our forecast, which is pretty much where we are right now on oil, looked a bit outlandish. We're moving closer and closer to it. So maybe not a lot more upside from oil, but nonetheless, it also does its part to weaken things.
Hartmut, how are you feeling about tech more broadly at the moment? Obviously, I guess that depends on whether you think we're going to stay higher for longer or whether, there might be an outlook for pressure coming off AI and tech-related stocks.
Yeah, we currently have a neutral position on the tech sector, and also I should say the broader ones. That's not just narrowly defined as IT, but sort of what is generally considered tech usually, so including the platforms. That is a space. It's not necessarily cheap, but naturally, right, you do get the extra also structural growth from the AI side. So I'd say fairly neutral overall, but within a very clear focus on the next big thing, and that is ultimately, as we all know, that is AI. So we need to look for exposure there.